Okay, very good morning. Anthony here to give you a bit of a brief of what's happened last night and a run through of what to expect for the day ahead. A bit of a change up. How I'm going to do things going forward is that I'll come on first in terms of in a recorded format of doing the briefing on the fundamental side, brief look at the charts as well, but mainly talking about the fundamentals, and then my colleague Sam will come on. So for you guys, if you have any questions about trade setups, technicals, so on and so forth, he's going to come on afterwards in Trading Live, and obviously any direct questions for him, then please just feel free to put them in the chat. Any products you'd like him to look at as well, outside the traditional mix of the kind of core assets, then just go ahead. Feel free to do so. All right, quick look at the charts for this morning, and we had a bit of a negative close on Wall Street, kind of seeped through into the Asian reaction. But this morning, I would say in terms of the kind of cycle and interpretation of the news, which predominantly is still being led by the trade war situation and a kind of flip-flop from the administrative officials from the US, things have kind of stabilized. If you like, we had the real seesaw move in US equities yesterday. So, you know, if I just put a rectangle around the price action that I'm referring to, was really here when you had the big push up. This is when initially Trump was reported as saying we're not going to take the most harshest measures against China. The market, the equity market specifically, responded the most aggressively, but we did see that kind of feed through into some of the asset classes, but was definitely most clear in the equity space. We came all the way up, got up to that technical point, so I've still got some of the ellipses here on the chart from what I'd marked up yesterday of when the price was moving as potential targets on some of the rise that we were seeing, and then kind of the return of Larry Kudlow 3 days back from his mild heart attack. He's back into the fray, and he came out and said, whoa, it's not the case, we're not making these types of concessions, and so on and so forth. And then gradually the entire move reversed, and in fact we got down technically to a retest of, in the futures at least, the 2700 handle psychologically, which was also the low print that we had. This is what going all the way back to Monday's session, so a bit of a floor and a double bottom now on the week. And looking at where we are now, we've recovered back up to find a little bit of resistance this morning, because as I said, nothing particularly new has come out, and I think the market's kind of got over the episode of the news flow from yesterday, so it kind of reset back to zero again, or neutral. So 27.14 and 3/4 back to around that support point that we saw on Tuesday's session is just acting as the first line of resistance here. Any push above there, obviously pivot sitting not too far above, and then you've got the kind of lows from would have been late Tuesday evening, maybe above there to have a look at, then the highs on Tuesday and all the way up to the highs from yesterday as kind of the various different near-term levels to keep an eye on the day. Again, calendar-wise, we'll have a look in a second. There's obviously quite a few US things coming out this afternoon, but I'd say, as has been the case all week, your main kind of risk to potential more sharp and immediate market movement could be anything still pertaining to the trade war situation. But we're going to have a look at that in a second, because there might be a reason why Trump might decide to be a little bit more passive today, particularly because he's doing a bit of a tour in Wisconsin, and we're going to have a look at that in a second as to why he's there and spending all day there on a real PR campaign. But looking at the other charts, FX, when I came in this morning, dollar was actually rising at the time, firmly above 95 in the Dixie. So both the major pairs were under a bit of pressure. So first thing I was doing was kind of talking through a couple of these charts to look at potential downside, because we broke the previous low we had yesterday evening. That snapped the price lower, and we actually took out the 116 handle. So we were eyeing down at, you know, if I broaden this chart out a little bit, you can see the significance of that previous bounce that we had off the level from last night. We broke that, and so quick succession punched lower, and was just eyeing around the low print that we had from last Thursday, which was just above in the futures the S1 level. But we have recovered since, and some of the kind of bullish start for the dollar just dissipating a little bit. So both pairs have seen a bit of a mild bounce. Otherwise, in oil, obviously a big day, big couple of days that we've obviously seen in oil, and we surged higher again in the wake of the crude oil inventories we had yesterday. So he was talking about this a lot in respect to the APIs have kind of pumped it up as to be, it's got to be pretty spectacular in order to really see another bullish move to the upside, given the drawdown was pretty large in the APIs, in fact the largest since September 2016. But the DOEs didn't disappoint. We obviously had a drawdown of, I think it was 9.8 million. The one that stood out to me on the immediate hearing of the announcement was the Cushing number was a draw of 2.7. So that was more than that was double that of what we had from the APIs in terms of size of draw. And US output for 2 consecutive weeks now seems to have leveled off. And so we popped higher, kind of had a test at 73, failed to break, but that's definitely going to be watching that like a hawk today on the upside should we continue to rise. Near term, obviously, we've got the 68, really about 8 cents shy of that now in the futures, which is the overnight Asia Pac high. But that 73 is going to obviously be a big one to watch today. On the daily chart, the reason why this is so important is because, I'll just readjust my chart here, you can see we had a brief test of this in mid to late May, this level of resistance. We have yet failed to really punch above it, but you can see here we got to go all the way back to what is November of 2014, the last time we were this high. So these kind of the lack of material supply addition that comes from this increase that OPEC have said, with general demand prospects from an economic growth story helping support that side of the equation, and now some of the inventory more short-term narrative helping the price just punch up to have another look at this key level. So worth just keeping an eye on that today as well. Could be interesting for oil, but there is no kind of scheduled event in that respect otherwise. Okay, quick look at the headlines. We do have the EU summit kicking off today. That's to last both today and tomorrow, but what was billed as quite a big deal for financial markets, particularly around the topic of Brexit, of course. Brexit has basically been bumped right to the bottom of the agenda. In summary, why? Well, there's nothing to talk about because nothing has happened. We'll have a look at a few things in a second, but I think this EU summit is going to be a bit of a damp squib, i.e. nothing market moving unless, of course, something unexpected develops. I'm not really looking for this meeting to really have that much of a material impact on asset prices at all. What they're talking about here, a couple of the obviously from a there are things that are important for just general sentiment longer term, and obviously the political situation in Germany, of course, this is a real test moment for Angela Merkel. Not because Germany got knocked out of the World Cup, but because, of course, she is under immense pressure at the moment to keep the government together with her sister party between the CDU and the CSU, which is broken down in the last few weeks. One of the key issues, obviously, that's impacted Germany domestically is this issue of immigration. And migration is back in the spotlight because it's not just Germany, of course. We also have Italy with the 5-star in the league now. So refugees, migration back at the top of the EU agenda, and particularly interested to see how Merkel can manage the situation. Now, is this a immediate intraday trade that you could translate into the euro? Well, no, I don't think it is, but it's certainly something to contemplate for trying to judge then the longer term validity of Merkel's power that she has at the moment. The most testing point of that's coming, I think there's some major regional elections coming towards in the autumn, in October. So she's got some time, so this isn't an immediate thing, but certainly her position has looked slightly fragile in terms of the strength of the current government formation. Other things other than that, transatlantic tensions, of course, trade talk. So could be interested to see if they make any kind of, I guess at the end of this event, some sort of coordinated message to retaliate to the US. Obviously, the more aggressive, the more then that might stoke the US, and there's tit for tat, and it could be negative in that situation. But I think that Europe will be fairly even-handed in their approach. We are talking about Europe, not the US in this respect. Talking about the euro, and then obviously Brexit as well. Now, ING have done as they always do, quite a neat crib sheet of the more ambitious plans, going from less to more ambitious from top to bottom on the 4 key areas: the ESM, the banking union, Eurozone budget, and debt restructuring. But again, I'm not going to talk about this any more than just showing it to you for your reference, because I don't think any of this is going to be something which is going to really influence a short-term strategy to trade the euro today. One thing though, from a practical point of view, that you can do if you want to just swat up on your timings of when you need to be more vigilant during the day to kind of manage your time and your kind of energy, then if you go on the European Council of the European Union website, you can get the full kind of media press pack, which has a live streaming link if you ever want to actually see these comments coming out live in real time. And then also, if you scroll down, of course, you get the full program scheduling, of which, as you can see today here, Brexit or the issue of Article 50 is not going to be discussed until tomorrow morning. But it can be often a good way to just add a secondary layer to your timings to be aware of for potential strategies or tail risks for one-off comments when you know when these exact timings of the meetings are happening. Quick look at another thing that I saw, and on the issue of Brexit, as I said, because of really, I guess, Theresa May being so caught up in just dealing with her own political situation. Obviously, we had that meaningful vote ping pong between the lower and upper house just last week, and so the real pressing points of the border issue between Southern and Northern Ireland have not yet really been resolved. There's not really been any progression at all, so hence Brexit has been bumped down the list. This article kind of suggesting the same thing. It comprises a batch of kind of economists from different banks, and we're all singing from the same hymn sheet essentially. That Brexit's been put on the back burner. This event could ultimately prove to be a non-event for sterling. There is a Conservative cabinet meeting next week, which obviously is quite key to now readdress these issues. And the Northern Ireland issue continues to be just that, a real big sticking point. So, yeah, just to put it into some context, that's all. A few other things. Going to the calendar first. I'll get to Haldane in a second. We've had a couple of economic data points already. The German state CPIs, you've had the German state of Saxony being one of the first. That came out month to month at 0.1 against previous 0.5. The year-on-year 2.1 against 2.2, so a little bit softer than previous from the first German state. We got the rest to come as we go through the morning, but it hasn't really translated into much of an impact overall on the European assets. As we go through, there's a batch of data coming out of Europe at 10 o'clock, and for any of the newer traders, although this sounds quite interesting, quite punchy, business climate, economic sentiment, all the different subsectors, actually this very seldom does it move the market. It was kind of lower tiered, I would say, in that respect. Going to the afternoon, from data points of view, it does get a little bit more interesting, but I think one thing that needs to be into context is, of the main 1:30 release from the US, GDP and the core PCE prices and initial jobless claims, well, first of all, we know the jobless claim situation, so scratch that. It's unlikely to be market impactful. But for the GDP report as a whole, with its various different constituents, this is Q1 final reading. So we're not expecting really any revision to the headline figure to remain at 2.2%. Now what's key here, and something which you do need to remember about the prospects of the American growth story going forward, is that this is what GDP looks like at the moment. And Q1 has gone through a series of downward revisions over time to the point of 2.2%. But obviously we have had things occur in Q1 like the weather, which may then had potentially offset the kind of realization of the maximum performance of growth that the US may have seen. One interesting thing that markets do look at are forward-looking GDP trackers. One of the main ones that does get followed is actually one that's done by the Federal Reserve Bank of Atlanta. Now there is one done by the New Yorkers Reserve Bank as well, but it's the Atlanta one that tends to get quite a bit of the market's attention. Now what this does, this GDP Now tracker, quite simply, is it's a forecasting model that provides a nowcast of the official estimate prior to its release by estimating GDP growth using a methodology, and this is the important part, a methodology similar to the one used by the Bureau of Economic Analysis that obviously computes then the Labour Department's GDP. So what's important is scratching then, let's say, the weather impacted Q1, the current Atlanta Fed Q2 estimate for second quarter growth in the US is at 4.5%. You know, this is incredibly strong, and this is a powerful rebound from what we've been seeing. So flip back to our GDP chart. Here we are here at 2.2%. Look where 4.5 would put us. We're right back up there at the highs of 2014, which you go back further, this is pre-financial crisis type growth levels. So, you know, when you talk about equities, trade wars, yes, trade wars is a obvious massive risk to the market and certainly equity valuations. But if you look at the micro fundamentals from the earnings season we've had, if you look at the kind of the prospects, at least for the time being, of what we're calculating through these methodologies for most accurate estimates for growth in the second quarter, you know, things are still looking pretty strong. It's just how does Trump manage this trade situation, which is the kind of big risk, I guess, in that respect. So hopefully this just adds a little bit of context to, you know, obviously you can talk the market, you can talk your book either way. I was reading about a very notable hedge fund manager this morning who was saying that he thinks that, well, actually equity prices are at the point of a real crossroads of a rerun of the late 90s, early noughties, i.e. the dot-com bubble. And then with the tech sector having this huge outperformance that it's had, you know, there's obviously arguments for the other side, but underlying this, and obviously from a political point of view for Trump, if he can knock out 4.5% growth in Q2 with record low unemployment, you know, you're going to hear a lot more from him on Twitter, put it that way, and about how great he is. Talking of the man himself, and this picture obviously isn't Trump, this is the author of the website, but this is Trump's schedule for today. Now, if you look at Trump, he is holding a fundraiser in Wisconsin, Milwaukee. He's then holding a second fundraiser, and he's there all day. Now, why is he there? Well, he is there because he's participating in the Foxconn groundbreaking event, touring a new facility. Now, for a lot of you who know your technology names, you're probably very familiar with Foxconn. Foxconn is a Taiwanese company. It's the world's largest contract electronics manufacturer, and in fact it's the fourth largest IT company by revenue. Just to put it into some perspective for regular products that I'm sure many of you use, your iPhone, your iPad, your Xbox, your PlayStation, your BlackBerry, your Nokia all have Foxconn manufacturing involved in terms of the chain and processes. Now what's happened is that Foxconn are opening a multi-billion-dollar manufacturing plant which is going to generate an approximate 13,000 jobs for the local area, if you like, over the coming years. So obviously this is one of those things where Trump can say, you know, look what I've done for jobs, for bringing in new business. But I think what's quite interesting is, I don't know, I don't want to read too much between the lines, but just given Foxconn and the Chinese relationship that's very much in focus at the moment, be interested to see whether or not he's going to be as bolshy as he has been, given the fact that he's at a Foxconn facility saying about thank you very much for opening one of your factories here and spending multi-billions of dollars and employing lots of people. from the local community. Whether or not he'll back off of that today, not so sure, but certainly maybe something for consideration. Back to the calendar, and to wrap things up, the final point I want to leave you with is Bank of England's Andy Haldane. Obviously someone which you're all very familiar with now, because he is the individual that has flipped to join the hawkish camp of Saunders and McCafferty, and is now looking to vote for a rate hike in the last meeting, i.e. being the third of the three in the 6-3 vote that we had. Now, Andy Haldane, the Academy of Social Sciences annual lecture is what he's delivering, but the key point here is that text is to be released immediately. So when you see this on the Bank of England press media section of their website, what it means is you don't need to wait for him to speak. Basically, accredited news agencies already have his entire speech ahead of time, and they'll drop all of the comments at 2:30. So if you are a sterling trader or you're contemplating a strategy in the pound today, I would probably evert that time until at least have clarification of what it is specifically that he said first, because markets are probably going to be very sensitive to him specifically, giving his recent turn of kind of policy voting pattern, if you like. Okay, that's it. So going to leave you with that, let you get on. Final thing was, I was just looking at gold this morning. Continues to remain pretty heavy actually, and we were just looking at a couple of trend lines this morning, but what I'll do is I'll leave Sam to talk about the technicals after my chat. So I'll catch you in the chat room. Thanks very much, and have a great day.